Nav, renowned as a legendary day trader, gained fame for amassing millions from his parents' bedroom. However, the full story behind his early trading endeavors, his influences, and his struggle against the Matrix remains largely unknown. This journey reveals the man behind the myth and his rise to market Maverick. Before Nav's birth, his family fled poverty in India to settle in London, UK. Despite immigrating to a Western country, opportunities weren't readily available. His parents worked multiple jobs to afford Nav's education, hoping to secure a better future for him. Nav was a curious and determined child, often seen with his nose in books or tinkering with computers. His fascination with numbers and patterns led him to discover trading at a young age. With his parents' encouragement, Nav pursued his passion, driven by the desire to lift his family out of hardship. Nav's journey into day trading commenced during his college years, where he shared a residence with roommates. Intrigued by a roommate's lucrative endeavors in trading tech stocks using his student loan, Nav embarked on a quest to learn the trade intricacies. His relentless pursuit of mastery mirrored his past obsession with video games, wherein he dissected opponents' strategies to secure victory. Initial setbacks in trading only fueled Nav's determination, and it wasn't until post-university that he made a pivotal decision. He attended numerous trading seminars and networked with seasoned traders, often practicing his strategies late into the night. Despite facing financial challenges and numerous obstacles, Nav celebrated small victories that bolstered his confidence. His trading setup evolved, marking his journey from a novice to an expert. Driven by a desire to alleviate his family's financial burdens, Nav responded to an advertisement seeking futures traders. He joined a trading firm that felt like a stock market version of Peaky Blinders, where the intensity and camaraderie were palpable. Nav's initial impressions were a mix of excitement and apprehension as he navigated this new high-stakes environment. Initially, candidates underwent a rigorous three-part evaluation process. The first segment consisted of a quick and mental agility test, followed by a pattern and recognition assessment. Those who navigated through these challenges successfully proceeded to a final interview, wherein they were grilled on hypothetical trades. In May 2003, Nav and a select few survivors congregated at the office for their inaugural meeting. Predominantly in their early 20s, they collectively endured months of simulations, theoretical lectures, insights into trading psychology, and anecdotes from Paulo about his experiences in the field. Let me quote one of the lecture sessions: price ladder. Price ladder. This I'm excited to show you because a lot of you probably never actually seen what order flow looks like. This is what we execute on. 80% of our trades come from what we see there. Why? Because that's the raw market. Everything you see in charts and anything you read in articles, whatever it is, that's an extrapolation of what the market is. This is the market. Bids on the left, price columns in the middle, offers on the right. This is what we look at on a daily basis. In this video, I'm going to show you a month-end trade. On month ends, our traders really push their size because on month's end is where institutions, hedge funds, pension funds entering their books, trying to book in their profits. That's where you see a lot of order flow. So let's take a look real quick. You see at 44S, as you seesaw seeing a buy, he buys 80 lots. Now every tick is Euro 800. You see a bit of a seller coming around. I'm seeing a bit of a seller at 46, 47. He is probably going to offer 47. He offers 40 at 47. He gets filled. He's trying to get 48. He tries offering 48 to get them. He offers 47. SE is again a seller's coming in. He's leaving his offering in so that he can try and sell it. This is in minuscule time frames. Not even 5 seconds. That was 2,400 euros. This is the kind of price action. Watch the interaction between the bids and the offer, how the market's interacting with each other. And you see that price action. How are you reacting? How are you getting involved? And so sometimes, I mean, not all the time, are we always trading such big size, but when, you can feel the edge in the price action, that's where you want to be pushing it. Nav's first trade was a nerve-wracking experience, but he executed it with precision, marking the beginning of his journey in the trading world. The exhilaration of his first successful trade was a moment of triumph, solidifying his passion for trading and setting the stage for his future success. Sequestered at his trading desk for hours, Nav adopted a scalping strategy, eschewing traditional methods for a keen focus on market movements akin to his gaming tactics. This approach required rapid decision-making and a deep understanding of market patterns. Apart from the founders' quarters, all other staff occupied a communal space where office announcements blared through speakers, a cacophony Nav found unsettling amidst his trading endeavors. The noise often disrupted his concentration, making it challenging to maintain his scalping strategy. Recognizing the significance of mental clarity, Nav endeavored to shield himself from the distractions. He used noise-canceling headphones and created a personal bubble to stay focused. Colleagues labeled him absent-minded, occasionally finding him beginning his trading session still wearing his bike helmet. Despite these quirks, his dedication to his strategy was unwavering, and he continued to refine his approach amidst the challenges. In 2005, the firm formerly known as IDT underwent a relocation to Woking and rebranded itself as FUTEX. The company experienced significant growth, expanding its workforce through new hires. However, despite its apparent success, discontent brewed within the organization. At the helm was Paolo Rossi, the firm's founder, who had amassed his wealth through futures trading in the London pits during the 80s. Now residing in a mansion and arriving at the office in a Ferrari, Rossi aimed to inspire newcomers with his charisma and tales of past exploits. While some found solace in his leadership, Nav remained unconvinced. Nav's discontent stemmed from the lack of genuine mentorship and the firm's focus on profit over people. This growing dissatisfaction would eventually lead him to seek new opportunities beyond FUTEX. Driven by his ambition to become the foremost day trader globally, he doubted the relevance of Rossi's experience to his aspirations. Unfazed by authority figures, he clashed with Marco Rossi, responsible for day-to-day management. In response to his stellar returns, he routinely confronted Marco, advocating for increased capital and risk limits. Their confrontations often escalated into heated arguments, with him asserting his dominance and defending his pride as a trader against any challenge. Despite the perception of their relationship as toxic, he leveraged it to refine his skills and push boundaries. While the imposed risk limits curbed his aggression, they also served as a catalyst for improvement. His ambitions remained undeterred, driving him to constantly evolve and aim higher. Around 2007, market dynamics began to shift noticeably. At FUTEX, he observed peculiar movements in the trading ladder, coinciding with a period marked by losses among many of his colleagues, which persisted in the subsequent months. Despite gaining more prominence, he found it increasingly challenging to navigate the market dynamics. Algorithmic trading, rapid order execution, and evolving market conditions posed significant hurdles. As his competitors honed their skills, he felt they possessed an almost supernatural ability to anticipate market movements. What he didn't know at that moment was that his opponents were no longer human. While traditional firms like FUTEX focused on recruitment, others such as Getco and Jump Trading prioritized hiring skilled coders, becoming pioneers in quantitative trading. By 2008, quants accounted for a substantial portion of market transactions. Exchanges, recognizing their profitability, began offering them substantial commission cuts, incentivizing their dominance. Ironically, these same exchanges were tasked with regulating market activities, blurring the lines between oversight and self-interest. The rapid evolution of algorithmic trading created a volatile environment, making it difficult for traditional traders to keep up. Navigating these new market dynamics required not just skill, but also an understanding of the underlying algorithms driving the trades. He initiated a strike, disillusioned with the market conditions that left him with only a fraction of profits compared to the substantial gains retained by FUTEX. Tensions escalated after contentious debates with Marco, deteriorating their relationship. Nav's dissatisfaction with his superiors became evident as he openly challenged them in front of fellow traders, causing irreparable damage. When he received a notice from the tax authorities, Nav's paranoia led him to blame his bosses for his predicament, intensifying his desire to leave. Determined to take control, Nav devised a plan to manipulate the market, aiming to expose its vulnerabilities. His actions sent shockwaves through the financial world, causing massive disruptions and drawing the attention of regulators. The consequences were severe, leading to increased scrutiny and tighter regulations, forever changing the landscape of trading. On November 20, 2008, amidst the backdrop of the financial crisis reaching its peak with the lowest S&P closing in a decade, Nav secured a new broker, GNI, and rented a desk at CFT, a trading firm near the Tower of London. As the fallout from the Lehman collapse reverberated, reports continued to pour in, signaling the gravity of the situation. The intervention of the U.S. government became imminent. On that Friday morning, Nav began purchasing futures. Despite a turbulent start, the situation gradually improved. Over the ensuing weeks, market enthusiasm intensified, fueled by announcements from the Treasury regarding substantial investments in Citigroup. Nav, confident in the market's potential, increased his investments, much to the concern of his new broker. At this juncture, the majority of traders believed that the recovery had reached its peak. Compounding Nav's predicament, he found himself nearing his margin limit without implementing a stop loss as the U.S. market closed. Anticipating potential losses, his broker contacted Nav the following morning, only to reach his mother, who woke him up. Nav spent the day reviewing market data, analyzing the impact of the financial crisis on his positions. He made strategic decisions to navigate the volatile market, demonstrating his resilience and adaptability. In discussions with his broker, Nav planned his next moves, determined to turn the crisis into an opportunity. Signs of market recovery began to emerge, and traders grew increasingly optimistic. Nav's confidence paid off as the market started to stabilize, showcasing his ability to navigate through one of the most challenging financial periods in history. On Friday, June 12, 2009, he reached out to his broker via email, requesting to be connected with a trading technology expert. He followed up with an email titled Matrix, outlining his specific requirements. 1. On-screen display. 2. Close if close function. 3. Alternate the proximity by one or more prices. 4. Join bid offer orders without immediate execution. 5. Enable one-click order entry for multiple prices. 6. Allow orders to adjust their size dynamically based on available volume, remaining at the back of the order book. 7. Enable entry of integer values only. Finally, he requested that orders only accept one-click executions, ensuring immediate adjustment of remaining balances after partial fills. Nav's technological innovations were groundbreaking, allowing him to manipulate the market with precision. His custom-built algorithms could place and cancel thousands of orders in milliseconds, creating a false sense of market activity. This high-frequency trading strategy enabled him to profit from tiny price movements, making millions while remaining under the radar. His ability to dynamically adjust order sizes and execute trades with a single click gave him an edge over traditional traders, revolutionizing the way trading was conducted. On May 6th, he activated his trading setup, utilizing the Cancel If Closed feature to initiate 4 sell orders totaling 2,100 contracts, positioned 3 levels above the best offer at $1,163, with a collective value exceeding $120 million. Over the next 6 minutes, these orders automatically opened and closed a staggering 604 times. Subsequently, at 5:17 p.m., he engaged the auto trader for an extended period, leveraging 6 sell orders totaling $200 million in value. In just the final 2 hours, he executed trades worth a combined $3.4 billion, resulting in a profit of $879,000. Moments after deactivating his trading program, the E-mini began a precipitous decline, unprecedented in its velocity and intensity. Within 4 minutes, it shed 5% of its value, resembling a steep cliff. This downturn spread to the S&P 500 and individual shares, sparking widespread panic. Trading halted at 1:45, triggered by the automatic pause system due to the steep market decline, freezing trading for 5 minutes. Following the pause, markets rebounded at an astonishing rate, far surpassing human capacity. In the aftermath, governments and regulators initiated investigations to uncover the cause of the dramatic market movements. The media dubbed it the flash crash, and it became a focal point for discussions on market stability. Financial analysts debated the implications, questioning the role of high-frequency trading and algorithmic systems. Legal proceedings ensued, with traders and firms facing scrutiny and potential penalties. Despite the chaos, the market eventually stabilized, but the event left a lasting impact on trading regulations and practices. On April 21, 2015, he was arrested in a coordinated operation between US and UK authorities, leading to the unraveling of his life. Managing tax obligations, business investments, and offshore accounts became overwhelming, transforming trading into a complicated ordeal. While in prison, grappling with his autistic traits, he struggled to maintain his mental well-being. Witnessing his cellmate's suicide attempt pushed him to a breaking point. As his lawyers attempted to secure $5 million in bail from his offshore accounts, they discovered the extent of his dire situation. His business partner, Jesus, was not the astute money manager he appeared to be. Instead, he operated a pyramid scheme, using new investor funds to pay off existing investors. The court proceedings were grueling, revealing the full extent of the financial mismanagement. His family was devastated, and the stress took a toll on his health. Reflecting on his choices, he realized the magnitude of his mistakes. Before his sentencing, he requested to share a few final words. He expressed he spent 36 years chasing happiness along a path built on deception. He pursued activities that society claimed would bring fulfillment. When they failed to deliver, he was lost. Eric Aldrich published a comprehensive analysis on the flash crash and S&P 500 E-mini trading data, concluding that his impact on the market downturn was minimal, at most affecting a 0.3 basis point decline. The hashtag #FreeNav gained traction among day traders on Twitter, highlighting his perceived role as a scapegoat for larger quant firms implicated in the flash crash. Despite this, many in the day trading community continue to regard him as a legendary figure who rose from humble beginnings to become one of the market's most influential traders, all from the confines of his own bedroom. His journey serves as a testament to the power of resilience and the impact one individual can have on the financial world, even from the most modest of settings. Nav's journey from a bedroom trader to a market maverick has been nothing short of extraordinary. His story has inspired countless traders around the world, proving that with determination and skill, anyone can make a mark in the trading world. Thank you for watching, and stay tuned for the next installment featuring another day trading legend. This video was brought to you by the legendary gamer. Have a good night.